Hello and welcome to Investing Confidential. Are you wondering why the stock market just keeps going lower and lower? If you've been watching my videos, you probably know the answer. But if you're new to this channel, what I'm going to lay out is basically an insider's view to the data. Okay, I focus on the data that drives the U.S. market, and more importantly, even drives the international markets because everything is linked. Okay, this is a globally connected world, and you got to understand what's going on in other countries and other regions that are affecting the U.S. Because if you don't, you're not going to get the full picture, and then you're depending on Wall Street and all these other maniacs who don't tell you anything. So here's what's going on: the Fed is not going to stop the rate rises. Okay, that's what you got to understand first. Everyone's heard that old saying, "Don't fight the Fed." They said it for 30 plus years. Okay, that means buy the dip, buy the dip. When they tell you don't fight the Fed, they're telling you to buy the dip. Well, the answer is true on this end. Okay. Don't fight the Fed. The Fed is raising rates. The market is going lower. Don't fight the Fed. Sell the rallies. Okay. I've been telling everyone this is a bear market. We are having vicious rallies. Okay. Here you see the put call situation. Still people owning a lot of puts, some of the highest put buying since probably the great financial crisis. This is why we're seeing these massive rallies, and they're going to continue. Okay, they're just going to continue. These bear market rallies, every time something comes out, people are desperate for good news, they're desperate for a pivot, whatever it is. They cover their shorts, and this is why these markets have these massive rises. But this is a bear market. You got to understand, don't fight the Fed, sell every rally. Okay, that's number one. There's no pivot. Okay, that's another thing. Just realize the Fed's not indicating any kind of pivot. Powell told you that. Don't waste your time looking for it. And, we're seeing here the most aggressive rate rise in the last, 40, 50 years. Okay. This is brutal. And this has not even sunk into the economy. Okay. This is the reason why we're talking about the market continuing to go lower. Why is the Fed doing this? Well, it's all about inflation. Now, if you've been watching my videos, I've been telling you inflation from a few months ago is coming down. This means the CPI. This means what the White House talks about. They wave their flag like in victory, but it's not good. Okay, inflation is coming down. Used cars have come down. Housing prices are plummeting, and they're going to continue to go down significantly more. You got artificially the Biden administration with the Strategic Oil Reserve have knocked down gasoline prices. They're waving the flag there. It's about $1.50 down from the peak, but that's all artificial. Okay, these gas prices are going to come right back again. Or they're going to knock our Strategic Oil Reserve till there's nothing left. Okay, it's already 50% below what it was, and that's artificial. The rest of inflation is very sticky. And the reason why the inflation is going to be around for a while, two reasons: services, okay, service inflation. This is, again, as opposed to manufacturing, this is service inflation. I'm going to show you why. But the main reason that inflation is going to stay sticky is because of wage inflation, okay? And wages have not gone up yet. And we're going to see wages are going to have to go up. Wages have not kept up with inflation for a very long period of time. Wages are down in the US versus 30, 40 years ago. The buying power is less. Again, someone the majority of people make lower wages than, let's say, the high income people. Talk about minimum wage, which everyone's discussing now. California is going to $22. They have no choice. Okay, people who live in California cannot afford to live there with the current inflation, and they're going to have to make wages significantly higher. I showed things in the past, the hospitality industry, all these industries that are causing this fake statistics about there's free jobs for every person. No, there isn't three. There's three lousy jobs for every person. Three jobs that pay $8 an hour, $5 an hour. I wouldn't work in those jobs. I wouldn't want my kids to work. I wouldn't recommend you to work in those jobs. Those wages have to go higher. Okay, you cannot work in the hospitality industry and the fast food industry making $10 and less than $20,000 a year and survive in this country. It's absurd. These wages have to go higher, and they will go higher, and that's going to drive inflation. So it's a spiral, and this is why the market is starting to understand it, but there's too many bulls out there. There's Jim Cramer and all these other idiots saying the market's good, the economy's good, etc. No, it's not. Okay, because small businesses are going to suffer. If you raise wages, it's going to hurt the bottom line of companies across the board. The large companies like Amazon and others, they can make their magic and hopefully keep their margins by cutting other things. But small businesses cannot. The largest expense for small business is labor, is our wages, and small businesses are going to suffer. Unemployment's going to rise because small businesses are the engine of job growth. Okay. Now, all of this is factoring in. You're going to have real estate, commercial real estate's going to suffer. All this is going to suffer because wages have to go higher. Okay. And that means that unemployment's going to rise because small businesses at first in the beginning are going to have to lay off people because they can't afford. They're going to have to pay some people higher wages, lay off others, and unemployment's going to rise. Okay, the consumer is going to contract. This is another indication why the economy is just in bad shape. Consumers are already contracting. They're going to continue to contract because it's all about the economy. You want to know about what the stock market's going on? It's all about the economy. As you can see, small business hiring plans here. As I mentioned, they're the largest employers over big businesses. They are starting to contract. This is just the beginning, folks. I'm just going to give you a warning. The unemployment rate is going to skyrocket here very, very soon. Also, office vacancy rates. This is an indication that either companies are going under or they're consolidating or the pandemic, whatever it is. This is not a good sign. This is a really, really bad sign. Always a leading indicator for the economy. Vacancy rates going up. Again, we show everyone has heard about this, but this is interesting. This is in pictures. Look at the tech layoffs starting in January. It's accelerating. It hasn't ended yet. We're going to continue to see more of this. And the tech industry obviously pays higher wages. Therefore, it's going to affect the economy down the road. But it's not just the tech sector. The tech sector gets all the press, but it's all the sectors, autos, manufacturing, whatever it is, hospitality. They're all being affected. They're all laying off people, despite what the government wants you to think is that there's free jobs for every person. This is complete hogwash because the unemployment data, as I mentioned to you, and those who have watched my videos, I show you in clear that this is fake information. Okay, unemployment is going to spike like a hockey stick. I mentioned it. It's going to happen. So just be prepared for it. Now, Wall Street, on the other hand, is positive, right? They telling you that, oh, the economy is going to be okay. The stock market is going to be flat or maybe up a little bit, blah, 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 blah. But this is, don't listen to Wall Street. Okay. I was there. They don't tell you the truth. Okay. Americans understand what's going on. Look at the Wall Street Journal poll. Americans they have a right to be pessimistic because the economy is nosediving. And look what the banks are doing. Okay, this is another reason why you need to really be careful here with stocks. Credit growth is declining, okay, into a recession. Now, the last thing you want to see is the banks pulling back from lending. Like, think about it. The banks start saying, okay, instead of giving everyone a credit card and all these auto loans and mortgages, they said, no, we don't want no exposure. And now they start pulling back. They're only lending to certain people with very high FICO scores, et cetera. And then others cannot get loans and they start pulling back. So the consumer really starts to pull back. And then you get an acceleration into a recession. And it's just a question really now of how deep the recession is going to be, not whether we're going into recession, because here again, the yield curve, the 2 and 10s, you're hearing about this a lot. Recession, my friends, is 100% possibility, not a 50%, which is what the White House is saying, not a 30%, not a 4. It's 100% possibility. Look at this chart. It's telling you everything you need to know. The real question is, how long is this recession going to last? Because remember, stocks are a leading indicator and they will tell you the stocks will bottom way before the economy. And in future videos, probably this week or next week, I'm going to tell you how long I believe this inflation and this recession is going to last. But for all you investors, be careful out there.